Some stocks do nothing for months and then suddenly they start moving higher. These are called breakout stocks. A breakout usually happens when a stock moves above a price level it has struggled to cross for a long time. And often there's a reason behind it. Maybe the profits are growing faster, or orders may be increasing, or the business may be entering a new phase of growth. Of course, not every breakout succeeds, but when a breakout is supported by strong business fundamental, it's worth paying attention to. So in today's video, we'll do exactly that. Hi, I'm Aparna, and in today's video, we'll look at 5 stocks with strong fundamentals showing breakouts, and we'll also understand what's driving the move. So let's get started. Now imagine a stock that went absolutely nowhere for 11 years. Every time it tried to rally, it got sold off. And then, boom. On the 7th of May 2026, the stock hit an all-time high of 521 rupees. In just 1 year, it delivered over 212% returns. Meanwhile, the Sensex was actually down 3.5% during the same period. So what exactly happened? Let's find out. The business actually turned around. Let's look at the numbers. FY26 was a record year for Bajaj Consumer. For the first time ever, they crossed 1,153 crore in revenue. That's 21% growth year on year. But the interesting part is the gross margins hit 60% and profits touched 190 crore. For a company that was stuck in neutral for over a decade, these are not normal numbers. And Q4 was even wilder. Revenue up 32%, EBITDA jumped 135%, and actual profits doubled. So where is this growth coming from? It starts with their flagship product, Bajaj Almond Drops Hair Oil. It's growing in 20s percentage-wise, volumes are up, market share is moving in the right direction. For a company whose entire identity is tied to one product, that's exactly what investors want to see. But here's what people are missing. A program called Project Aarohan. This is basically Bajaj Consumer's big distribution push. They're going into newer states, building deeper retail reach, and here's the data point that stands out. States where Aarohan has been implemented are growing 4% faster than states where it hasn't. They're now rolling it out to 5 more states. On top of that, they are not just a one-product company anymore. Their non-almond drops portfolio, brands like Bajaj Coconut and Banjaras, has already crossed 225 crore in annual sales. And management wants to take that to 500 crore in 3 years. If they pull that off, this becomes a very different story. But yes, there are risks. Raw material costs. Light liquid paraffin prices have gone up, mustard oil is still elevated, and management has signaled they may need to raise prices. The margin expansion we saw was partly because they had cheaper inventory in stock. If input costs stay high, that could be a risk. Now let's move on to stock number 2, BHEL. In May 2026, the stock touched a fresh all-time high of 407 rupees. The breakout came after 18 years of the stock going nowhere. 18 years. So what changed? BHEL isn't just about power plants anymore. It's in transmission, railways, defense equipment, hydro projects, nuclear reactors. This is one of the most diversified infra companies in India, and most people still think of it as just a power equipment maker. A year ago, the narrative around BHEL was lots of orders, but can they actually execute? Today, that question is being answered. Revenue grew 19% in FY26, but profits, they went from 513 crore to 1,578 crore. That's 3x profit growth in a single year. And the order book is nearly 2.4 lakh crore rupees. That's more than 7 times their annual revenue. It basically means BHEL has growth visibility for years. But the really exciting part for investors isn't just the current order book, it's what's coming next. BHEL is building capabilities in green hydrogen, coal gasification and defense. These are sectors where India is going to spend enormously over the next decade. And BHEL is positioning itself to be the company that builds the infra for all of it. And institutions have already noticed this. DII ownership jumped from 16% to nearly 24% in 1 year. And when institutions buy aggressively at an 18-year resistance level, they are not trading, they are betting on a multi-year story. The risk here, though, is execution. BHEL has the orders. The question is whether they can deliver them fast enough across power, railways, transmission, defense, all simultaneously. We'll find that out. Now let's move on to stock number 3, Bank of Maharashtra. In May 2026, the stock hit a 15-year high of around 86 rupees. And what's interesting is how it got there. While the broader markets were volatile and messy, this stock kept bouncing right off support levels, like investors were actively using every dip as a buying opportunity. Now let's look at what they actually delivered. The loan book grew 22%, profits crossed 7,000 crore and bad loans continued to fall. For any bank, that combination, more growth, better profitability, cleaner balance sheet is basically the trifecta. But the specific numbers are what really stand out. Retail loans grew 32%, home loans up 29%, vehicle loans up 56%, gold loans up 53%. These are not slow, boring numbers. This is a bank firing on all cylinders. And for the next year, management is targeting another 18% loan book growth. Plus, they are actively lending to sectors like renewable energy, infra, and data centers, areas where India is expected to invest massively. FIIs are starting to notice. FII ownership went from just 0.25% in 2023 to 5.6% in 2026. That's not noise, that's smart money positioning. But yes, there are risks. If there is a prolonged global slowdown or crude prices spike, it could start hurting MSME borrowers, which is a meaningful part of their book. Management is already aware they have made additional provisions as a buffer, but it's something to watch. Now let's look at the next stock on the list, which is GMR Airports. Now this one is really interesting because this breakout happened in the middle of all the global uncertainty around aviation and geopolitics. GMR Airports was stuck for 18 years and then in May 2026 it finally breaks out. Why now? Because India's aviation story has entered a completely different phase and GMR sits at the center of it. Think about what GMR actually is. They operate Delhi Airport, Hyderabad, Goa, and they are adding Bhogpuram, Nagpur, and even an international project in Crete, Greece. Every single time someone flies in India, buys a coffee, shops duty-free, parks a car, ships cargo, GMR gets a piece of that. For years, the knock on GMR was great assets, terrible balance sheet. The debt was massive and the profits just weren't coming. But FY26 changed that narrative. Revenue grew 40% to 15,200 crore. EBITDA is up 47%. And the company reported its first full year profit in more than a decade. Debt is gradually coming down too. But here's what really excites investors. More than 50% of GMR's income now comes from non-aviation sources like duty-free retail, cargo, lounges, advertising, real estate around the airports. This is the airport monetization story and it's growing much faster than passenger numbers alone. Delhi's international capacity has been expanded by 50%. Bhogpuram is ahead of schedule. Airport-linked real estate is emerging as a completely new profit engine. And promoters, the people who actually own and run the business, have increased their stake from 59% to over 66% in 2 years. Institutions also bought in. When insiders increase their exposure right at an operational inflection point, that's a signal worth paying attention to. But yes, there are risks. Aviation is always vulnerable. Geopolitical shocks, fuel spikes, airspace restrictions, management itself acknowledged that recent Middle East tensions temporarily affected traffic. This is a high upside, real risk story. Now let's look at the last stock on this list, Zydus Wellness. And this one's interesting because it's about a trend that's not going away anytime soon. How much money do you think Indians spend on trying to stay healthy? Protein bars, sugar substitutes, nutrition drinks, hydration products, skincare supplements. It's growing every single year and one company is right at the center of it, Zydus Wellness. In April 2026, the stock hit a fresh 52-week high of 535 and surged 7.6% in a single day on massive volumes. That kind of move on that kind of volume usually means institutions are aggressively buying. A stock that spent 5 years going sideways suddenly woke up. So what exactly changed? Zydus Wellness is basically the consumer wellness business behind brands like Sugar Free, Complan, Glucon-D, Nycil, Everyuth, Nutralite, Right Bite Max Protein. Together, these reach over 70 million Indian households. Now, here's the shift that investors are getting excited about. For years, Zydus depended heavily on a few mature seasonal brands. Today, they are building multiple growth engines simultaneously. Right Bite Max Protein, which is one of India's fastest growing protein snacking brands. Sugar Free Green, 20 consecutive quarters of double-digit growth. They have also acquired Comfort Click, giving them a foothold in Europe's online vitamins and supplements market. The numbers back this up. FY26 revenue grew 46% to nearly 39,000 crore. EBITDA is up 34% and gross margins expanded from 52% to 60%, which means they are selling more premium stuff and it's more profitable. Distribution is also evolving fast. Organized channels including e-commerce and quick commerce now make up nearly 30% of domestic sales. Quick commerce alone contributes 7 to 8% of total sales and is still growing rapidly. But let's look at the risks too. Some of their biggest brands like Glucon-D, Nycil are heavily dependent on summer demand. A weak summer or unseasonal rain can genuinely hurt quarterly numbers. That actually happened in FY26, so there's some seasonality risk here. But the bigger question investors are asking is, if India's health and wellness industry continues to grow over the next decade, and it almost certainly will, could Zydus become one of its biggest beneficiaries? So these were the 5 stocks showing breakout setups right now. But here's the most important thing to remember before you do anything with this information. A breakout is just the market beginning to recognize a story. It's not a guarantee. What matters and what we try to decode today is whether the underlying business can actually support the move. So what you need to pay close attention to is not just the price breakout but also strong fundamentals. If you found this video useful, please drop a like and also comment if you want us to continue this series. And if you're not subscribed yet, hit that button. We break down stocks and markets in exactly this way every week. No jargon, just clarity. See you in the next one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.